Hey guys, Boaxian here. On today's episode, I want to dive into SBA and the updates on what I'm seeing. This is the end of May right now, 2024, and the calls I'm getting, the opportunities that I'm seeing for people with SBA financing. So let's dive into that and more. We just did a rate update on the 504 rates. You can go back. I'll link to that video if you're interested in looking at the SBA 504. Rates came down slightly on that 504 loan program. Remember, that's a first and second. But diving into what I'm seeing the most, I'm seeing a lot of people structuring business acquisition deals. They might have been in real estate. They're looking for different opportunities. I'm seeing that the people that are focused with a buy box are finding really good business opportunities right now. So businesses that have been around for many, many years. There could be somebody retiring, divorce. There's always reasons for people to sell real estate, and always reasons why people are selling businesses that are very profitable. So it's a matter of getting in there and figuring out how to structure the loan so you can take it down. So that could be some seller financing. That could be putting a portion of the loan proceeds on full standby to make the numbers work from a debt coverage ratio standpoint. And remember, on a business acquisition with no real estate, it's going to be a 10-year term, no prepayment penalty, and so rates will be anywhere from prime to prime plus 2.75, depending on the bank and institution or non-bank SBA lender, depending on the risk of the deal. So the margins are what changes. Some banks actually offer, on a non-collateralized deal, they'll offer a fixed rate option as well. So just understanding what's out there, and that's what I do at my company. We help people navigate the loan process for government guaranteed loans such as SBA, USDA, etc. We do some bridge financing once in a while. So really, I'm seeing a lot of business acquisitions, trying to make the numbers work, trying to put together LOIs. But there's a lot of people that are in the real estate space that I'm seeing own some multifamily, but they're saying, okay, I quit my W-2 job, now I want to own this business. The nice thing is potentially if there's enough cash flow, that salary for the business that you're acquiring can help from the global cash flow perspective. I do have one client right now who quit his high-paying W-2 job a while back, owns some real estate, and you're able to utilize the salary if the cash flow is right in the loan as your kind of global cash flow. Because remember, they want to see that your outside income can support your outside debts, basically, right? And so if you don't have a job and you don't have enough cash flow, then potentially that corporate salary in the new business acquisition could suffice. The other thing too is I size up the deal with multiple banks or lenders, and so there's different risk tolerances. Some banks are more aggressive on certain business types. Some are more conservative. So really just trying to get the right proceeds. So if we know we have a certain amount of seller carry, the seller said, hey, I'm willing to carry $400,000 on this deal, that's it. It's really just about navigating and getting the right bank, because one bank could make the numbers work at 400 grand, but another bank might come back and say, okay, well, we need 600,000 on a seller carry on. This is a larger acquisition. So getting in there, because if we want to win the deal, we gotta give, have a win-win for the seller to say, okay, I'll agree to these terms and sign the LOI. So just getting max loan proceeds and structuring the deal is critical. That's why working with an advisor, we can help you navigate with many different banks to find the right fit to get the deal to the finish line. The other trend I'm seeing is people that they own real estate for their business, and they're prime plus 275, so they're 11 and a quarter on these big loans. And so many banks we can do, like right now I have a bank that's going to do a 5-year fixed rate on a 7A on a refi, and they'll do it fixed at 8.75. So we'll take the person from 11 and a quarter down to 875, and we could also do it as a 504. 504 sometimes makes sense, but for this circumstance, I think if we get in there, we're gonna have a 3-year declining prepayment penalty. This is a 7A to 7A refinance on a commercial building. because I believe that rates will be more advantageous in 3 or 4 years. I don't have a crystal ball, but this way you're not locked in on a 10-year term. And so that's what we do. We have to look at all the pieces and really do a comparison. We recently got another deal approved. Gentleman's doing a franchise restaurant on the bottom floor, and then acquiring a building and then building up 2 stories. The most of the space is going to be the restaurant franchise model. Upstairs will be actually a residence. That's over a $6 million total project cost. So we can get creative. We're doing a 7A with a small conventional piece on that. That's construction with a franchise component. We're doing a lot of franchise startups, a lot of service-based, sub $200,000. We have 2 banks we work with that are very aggressive that we can close these deals in 3 weeks. So we see a lot of those. We're seeing a lot of people that are trying to buy franchises in other states. Maybe somebody is in another country, in the military. They're going to be moving back in about a year. They want to take advantage of buying something now. They feel like they have boots on the ground, they can run it. Banks sometimes aren't on board with that. So we have all these unique situations, and sometimes you'll go to other kind of big brokerages and they'll say, oh, that's not possible, or you take it to one lender and say, no, we only want to do loans if you're in a 2.5-hour radius for SBA. That's nonsense. There's ways to find other banks. There's compensating factors. So that's really a lot of what I'm seeing. I think there's a lot of opportunities for people to refinance their 7A loans if they're at prime plus 2.5 or prime plus 275 right now. We'll do an analysis to see when you would recoup, because depending on the loan amount, you potentially have to pay a guarantee fee, which would be rolled into the loan. But we want to see how long it takes to recoup that fee to see if it makes sense, right? That's what we do. We just do an analysis. Does it make sense or does it not make sense? USDA, great products. We're talking a lot about P&I loans right now. That's for rural communities under 50,000 population. We use a mapping. So they can do up to 25 million. You can sometimes utilize tax credits and other financing tools in the capital stack. You can also do community facility projects up to $100 million. There's an agricultural product. So sometimes USDA is a very good product for the rural motels and the more RV parks, senior assisted living in more of the rural communities is why you would use USDA. So USDA definitely has a place out there for certain deals, just like SBA 7A and 504 have places. But the government guaranteed loan programs are phenomenal. Really understanding them and how you can leverage them. You can have up to $5 million of aggregate SBA in the same business sector, but you could actually have more financing if you owned a franchise, massage parlor or salon, and then you had $5 million in aggregate there. You could also have $5 million in aggregate in another type of business. So a lot of people don't know that. That's recently changed, and it has been tested. You can do conventional financing alongside a 7A. We call it pari passu. And so you could, on larger business acquisitions, you can get a $5 million 7A with like $2.5 million potentially of conventional financing. Not all banks do that, but we do have a couple bank partners that like to do those. Bigger manufacturing companies, great cash flow, just a little bit outside. They'll match the 7A with a conventional piece. So that is a great tool. On franchise startups, a lot of people say, oh, you don't have enough reserves to look post-close liquidity. We have banks that will actually look at the working capital that they're building in the SBA loan as part of their post-close liquidity. So if you're being told no and everything else checks out, you have good credit, they're just telling you don't have enough reserves, give me a call. Go to bookwithbo.com. Let's see if we can structure a deal that wins. I also ask a lot of questions. So there's a lot of other things you can do, like maybe you have equity in a home, maybe there's some alternative financing, maybe you can bring an investor partner in, maybe you can get a gift. So anyways, go to bookwithbo.com if you want to talk about financing. I love financing. If you're looking to do a business acquisition or a franchise startup, we do have a franchise division. We do franchise startups and resales. So you can go to bookwithbo.com to talk about how to go through the franchise buying process. Anyways, hope you enjoy this short episode on the SBA updates. Look forward to working with you soon. If you're looking to acquire a business, stop scrolling on Biz Buy Sell and visit franchiseresellelistings.com. We'll do a customized search. You can get on our weekly distribution where we're sending new inventory weekly to your inbox. So visit franchiseresellelistings.com and opt in today. See you there. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.